Hello and welcome to another episode of Malone Bailey's official podcast, Everybody Counts. Thanks for tuning in. I'm your host, Carolina Hocategi from the recruiting department at Malone Bailey. Isn't your first time tuning in, but if it is, welcome. Our podcast, Everybody Counts, features various perspectives on a variety of topics, from the latest SEC and FASB updates to discussions on recruiting, retention, and more. Everybody Counts explores trends and hot topics that affect us and those in our business. The focus of today's conversation is on the FASB update, Accounting Standard Update number 2023-08, Subtopic 350-60, which focuses on intangibles, goodwill, and other crypto assets. I'm delighted to be joined today by Mariano Fregon, partner at Malone Bailey, who will share his thoughts on these accounting standard updates. Welcome, Mariano.
Thank you, Carolina.
Excited to have you here today, Mariano. Let's jump right in. As we discussed in our February podcast, we know this ASU is intended to improve the accounting for certain crypto assets by requiring an entity to measure those crypto assets at fair value each reporting period, with changes in fair value recognized in net income. Can you tell us a little bit more about the subtopic 35060 adopted on December 13th, 2023?
Sure thing. So this subtopic provides some guidance on the subsequent measurement, presentation, and disclosure for all crypto assets that meet the definition of crypto assets, including this ASU. One thing to consider is this new ASU does not address the initial measurement, recognition, and derecognition of crypto assets. So companies should continue to follow the same accounting that they were following before this new ASU.
Interesting. So who's affected by this update?
Sure. Essentially, any entity holding crypto assets that meet all of the following criteria are going to be subject to this new ASU. First of all the crypto assets that meet the definition of an intangible asset as defined in the codification. Second, all the crypto assets that do not provide the asset holder with enforceable rights to goods or services. Also, crypto assets that are created or reside in a distributed ledger, that are secured through cryptography, that are fungible, and last but not least, are not created or issued by the reporting entity or any of its related parties.
Gotcha. So what is this ASU intended to improve?
Yeah, on top of what you just said when we started this podcast, the amendment also improves the information provided to investors about the entity crypto assets holdings by requiring disclosures about, first of all, the significant holdings, second, its contractual sales restrictions, and last but not least, any changes during the reporting period.
Got it. What are some additional requirements the amendments in this update require of entities?
Sure. Additionally, this amendment also requires updates to certain presentations and disclosures. So if we think about the balance sheet, companies are required to present crypto assets measured at fair value separately in the balance sheet. In terms of the income statement, companies are required to report remeasurements changes separately, also as a financial statement line item. In the case of the cash flows, companies are required to present cash received from crypto assets received as non-cash consideration and converted to cash. And then from a disclosure perspective, companies are going to need to disclose significant holdings, which includes name, cost basis, fair value, a number of units of crypto assets that they hold, any sales restrictions, nature, duration, and circumstances lifting the restriction. They would also need to present an annual roll forward. They would also need to present disclosure disposal details. That entities that entails the difference between the disposal price and cost basis, activities leading to dispositions as well. Any gains and losses, again, if they were not disclosed separately in the income statement, they will need to be disclosed in the footnote, and then they will need to disclose as well in which FSLI were they presented. And last but not least, from a cost basis method perspective, they will need to specify how cost basis is being determined.
Thank you, Mariana. How do the main provisions differ from current generally accepted accounting principles?
Yeah, I think you briefly touched when you started the podcast, but under current GAAP, crypto assets are treated as indefinite live intangible assets. They're tested for impairment annually or more frequently if needed. If the asset carrying amount exceeds its fair value, an impairment loss is recognized, reducing the asset carrying amount of its fair value. Subsequent increases in the asset carrying amount and reversal of impairment losses are not allowed.
And how are they an improvement?
Yeah, there's different improvements that this ASU actually presents. The first one, it's obviously requiring fair value measurement of at each reporting period, recognizing changes from measurement in the net income, providing enhanced disclosure for annual and interim reporting periods, offering relevant information for investors to assess exposure and risks, aligning accounting practice with industry-specific guidance, as well as eliminating the need for impairment testing, as I just said, and reducing that cost and complexity related to those impairment assessments.
Yeah, interesting. And can you remind us of when the amendments will be effective and what the transition requirements are?
Sure. Effective dates for this ASU are fiscal year beginning after December 15, 2024, including interim periods. As most of the ASUs that have been recently released, early adoption is permitted for both interim and annual financial statements not yet issued. You also mentioned transition requirements. Obviously, as you can see, this is going from cost to fair value, so there's going to be some transition adjustments. So if the company adopts in an interim period, it must be as of the beginning of the fiscal period. If the adoption is at year end, then requires a cumulative effect adjustment to the opening balance of the retained earnings or other equity components at the start of the annual reporting period in which the amendments are adopted.
Thank you so much, Mariano. Remember, the AICPA updated its practice aid on the accounting and auditing of digital assets with new guidance to address the FASB's accounting standards update, ASU 2023-08, on the accounting for and disclosure of certain crypto assets. You can find this information on our website under resources. You can also find more information on FASB.com. Well, that concludes all my questions for now. Thank you so much, Mariano, for talking with me today about this topic. We're going to switch gears now and play a little game we like to play on the podcast. It's called This or That. So I'm going to ask you a question and you'll choose which you prefer. Ready?
Yep, ready.
Okay. Sweet or salty?
Definitely sweet.
Dog or cat?
I'm a dog person.
Road trip or plane?
That's a tough one because I do like both, but I would say plane.
Great. Thanks again for the helpful information today. I'm very appreciative of you taking time out of your busy schedule to chat with me, Mariano. I had a great time talking with you, and to everyone listening, we appreciate you listening in and invite you to check out our website, www.malonebailey.com, for more information about public company audit services, as well as some other useful resources. Thanks again for listening.